On today's episode, we are going to take a look at two stocks that just reported earnings and they're growing at crazy levels. And because the way the market is acting right now, you might have missed it. Both these companies are in two different industries. One is in the gaming and one is in the food industry. Both are, like I mentioned, have strong revenue growth, have a strong balance sheet, and we'll talk about much more in today's episode. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream taking a look at stocks you want me to look at. So let's get started. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done some crazy returns. If growing your money is something you'd like to do more of this year, you can visit thefool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now back to today's episode. So the first company we're going to take a look at is Tattoo Chef. This is a food plant-based company. They sell in multiple stores right now and are continuing to expand, and they also sell online. Tattoo Chef is a stock we've talked about in this channel numerous times, so if you want to learn more, make sure to check out some of those old videos as well. The stock is traded under the Nasdaq as ticker TTCF. Right now it has a market cap of less than 1.5 billion, and pre-market it is down about 3.7%. From its all-time high, the stock has fallen a nice amount. It is down about 23%. And it's weird, right? As a long-term investor, I actually don't mind correction because it gives us buying opportunities. It kind of reduces the risk of some of these stocks. And with it being down about 22%, there's a nice amount of risk already being eliminated from owning the stock. So Tattoo Chef is a company that recently went public through a SPAC merger. Before they went public, they only used to hit Costco, Walmart, and Sam's. Post-mergers, the amount of industries and stores they are entering now is insane. They're now in like Target, Whole Foods, 7-Eleven, ShopRite, Kroger, and so much more. In recent news, on March 10th of 2021, Tattoo Chef launches 6 plant powder products at Target stores nationwide, increasing the amount of SKU products they have there. So, I mean, that's a good thing. You like to see stores that already have them ask for more products. It means that the company is working, that the product is working. So they want to sell more of it because they're making money out of it. All right, now let's take a look at their earnings report. And the CEO starts off with great news for long-term investors. Just in the first quarter, they believe they will increase their store count by 41%. That is insane. I mean, I can see why so many investors are excited about this company. For the fourth quarter, their revenue was up 48% compared to the same time last year. Net income was up big compared to the same time last year, 41.5 million this quarter compared to 2.2 same time last year. But they do mention the main reason was because of a tax benefit of about 39.3 million. I think the best thing to look at is more of adjusted EBITDA. It was 3.7 million or 9% of revenue this quarter compared to 2.2 million or 8% of revenue same time last year. For the full year, revenue was up 75%. Again, this is a massive growth company. The company also gave us a guidance for 2021. They mentioned for the full year, they expect about a 49% revenue growth. They say gross margins are going to be around 20 to 25%. Those are some strong numbers for the food industry. And adjusted EBITDA is in the range of about 8 to 10 million. This is not much growth from this year though. This year we saw adjusted EBITDA be about 9.6 million. They also expect net income to be in the range of $2.5 to $5 million. Not only am I enjoying Tattoo Chef's crazy revenue growth, I'm also enjoying their balance sheet. They have about $131 million in cash available to use, and they only have about $2 million in debt. So pretty much no debt compared to cash. So now my thoughts on Tattoo Chef. I think they're a great company right now. They're seeing strong growth. Even analysts believe this company is going to grow 36% on average for the next 3 to 5 years. This is a hyper growth. We saw their guidance already being closer to 50% for next year. They are profitable at the moment, and they do have positive cash flow from operations and a very, very strong balance sheet. So I can see why investors are very excited about Tattoo Chef. The biggest thing I would say investors should take a look at is why has their adjusted EBITDA not changed too much in the past year compared to this year, and this doesn't seem like it's going to change much from the guidance they have given for next year. So that's probably my biggest red flag there, and something investors should keep an eye on for future earnings. So the second company we are going to take a look at is Skillz, and this is what many are saying the future of gaming entertainment. For those that don't know Skillz, they have pretty much a platform that helps gaming developers create tournaments inside their games. And the reason this is important is because tournaments increase the overall interaction with gamers playing the game, and it also makes them play the game more often as they are kind of having something to win. It gives them that competitive nature. And as you spend more time playing a game, those game developers are hitting you with more ads and making more money out of you. So the reason companies use Skillz is because they have already created this one-stop shop platform. They deal with the payments, for example, make sure there's no sketchy payment things happening. They also deal with anti-cheat and anti-fraud. They deal with the player ratings and the matching, the whole one-stop shop for a tournament hosting place. You might be wondering, how does Skillz make money? It's pretty easy. When you enter a tournament, you pay some form of entry fee. Out of that entry fee, Skillz takes a small portion of it, and that's it. So it's a very simple business model, and that's what I like to see for sure. Their gross margins are about 95% and have been about 95% for the past 2 years at least. So Skillz is traded in the New York Stock Exchange as ticker SKLZ. Pre-market, it is sitting about $27, and it is up about 5% after reporting earnings. It is still down about 37% from its all-time highs right now. So Skillz is another stock we talked about numerous times in this YouTube channel. So if you want to keep hearing about stocks like this, make sure to hit the subscribe button and don't forget to hit the thumbs up. One of the first things I mentioned when I first looked at Skillz were that the games they have right now are not that impressive, are not that cool. The future growth of this company is when they start partnering up with new games. Like right now they have like Tetris, Solitaire, Blackout Bingo, Blitz, Pool Payday, Domino's Gold. But imagine when they start getting sports game. Imagine when they start getting first-person shooter. And things like that are starting to begin. In February 4th of 2021, NFL and Skillz signed a multi-year gaming agreement. And in January 28th of 2021, Play Mechanics, which is the creator of Big Buck Shooter, you might have seen this arcade game when you were growing up, or when you go to like Dave & Buster's right now, you might see Big Buck Hunter. They are also partnering up with Skillz to bring mobile competitions to their mobile game. So now we're seeing some new players entering, and I think it's just a matter of time when we see even bigger games. I mean, imagine if, for example, Call of Duty Mobile does something like this, or maybe Fortnite, or whoever, if some very big popular game enters in Skillz, I think it's just going to be a home run for this company. So now if we take a look at their earnings, this was their first earnings as a publicly traded company, but the CEO mentioned that this is their 20th consecutive quarter of revenue growth. Fourth quarter revenue was up 95%. Full year revenue was up 92%. And their guidance for 2021 estimates a close to 60% revenue growth. And I believe here they might be a bit underestimating it, just depending on how many more games will end up using their Skillz platform. I think one of the best metrics to see here for Skillz is the gross market value transaction growth. And that has grown 78% compared to the same time last year. And I believe this is good because it shows more people are entering their tournaments. Like we mentioned, revenue growth saw a 95%. Paying monthly active users, these are people who enter their paid competitions. They sometimes also have free competitions, but in the paid competitions, they saw 121% growth compared to the same time last year. The average revenue per paying user is about $58. That to me is crazy. Unfortunately, one of the things I see a lot of people talking about are monthly active users are not growing as fast. It's kind of been pretty stale for the past 4 quarters. I want to say probably the main reason for here is they haven't really have any new games come out this quarter or in the past quarters for them. So seeing monthly paid active users actually increase, I think, is more important than monthly active users. Skillz has a very strong balance sheet. They have plenty of cash. They have about $262 million in cash and no debt at all. Unfortunately, one of the bad things of Skillz right now is they're not profitable, not even in adjusted EBITDA. So now my overall thoughts on Skillz. Skillz is one with a very cool platform. We can see with the new partnerships of game, that's super bullish. I believe in the next year, we're gonna see a lot of new games also come in here using their platforms. I think we're still gonna see an increase in monthly paying users in the upcoming quarters. Even analysts believe this company will grow 31.5% on average for the next 3 to 5 years. Unfortunately, some of the things I don't like is they're not profitable right now. They are not positive in cash flow from operations. But the good thing is they do have plenty of cash at hands that will allow them to continue to run their business and just continue to grow. So I hope you guys enjoyed today's episode. Like I mentioned, 2 companies in 2 different industries growing at crazy levels. And finally, make sure to follow me on Twitch, guys, where I live stream taking a look at stocks you want me to look at. Take care and have a good night.